Good evening. I'm Peter Reznicek, and this is the ShadowTrader Video Weekly for Sunday, December 16th, 2018. In last week's video, I talked at length about a box breakout in the S&P. We got that breakout this week, but it was a little bit lackluster. I'll give you all the details in a moment. Also, AAII, Investor Sentiment Survey. What is it? Why is it important? And why is the reading that came out this week maybe a little bit too bearish for the market to actually go lower? FOMC Monster Truck Rally next week, 19th, 2 p.m. I'm going to tell you why I believe this is the single most important Fed announcement of the year. Is 2019 the year that you finally join me in the deep end of market profile? If so, I hope so. And I've got Terry Lieberman from Window Trader on tap for a free webinar next week. Also, the ShadowTrader holiday sale is coming up. I'll give you a coupon code for 15% off on everything on our site. All that and the usual technical mumbo jumbo in the ShadowTrader Video Weekly. Let's get to it. So let's pick up where we left off last week, talking about the box pattern in the S&P. That's essentially this range here, roughly 200 points in this area. And I'm just going to move the box this way so we have the 5 days of this week separate. And you can see this is why I was saying that it was somewhat lackluster. It was actually a big bounce back up into range. And if you box it off like this, it shows it very clearly that we didn't really penetrate the low end of the box by very much. As a matter of fact, when we did break down on Monday, we rallied back inside of the box range, closed pretty strong, so that's considered a look below and fail, and then staged like a couple-day rally where we went up to here. Didn't close green at all, but we went up here, up towards the middle of the range, and then started falling off again. So overall, it's a little bit of a confusing picture as to whether or not we continue to push lower or not. The NDX is very, very interesting here because it's kind of an outlier in that if you notice that the pattern is very, very different. We haven't even really broken this uptrend yet here in the SPX, and it's not as clean of a box as I was saying in last week's video. You can see obviously that the highs here are somewhat lower than in the SPX, whereas the SPX has this more of a straight line, the NDX selling off, but then at the same time, somewhere in this area here, you start to gain a little bit of relative strength where you don't go as low, right? We know that if we look at the SPX chart, this here on Monday, that looks more like this, correct? We went well below, but in the NDX, they caught a bid there. So this is also what's going to possibly throw a wrench into things as far as the market moving down in a straight line manner. Prices generally don't move in a straight line, and that's when things get a little bit tricky, is when the indices are out of sync. So what you want to be watching for in this coming week is you want to be watching for the NDX to possibly test this trend line and then see if it supports here. And remember, we are caught in the middle of a pretty large H pattern. No matter how you draw it, it's almost like HH. And remember, the H pattern is always a hard pattern to get lower out of. All right. This week, something interesting came about called the AAII Investor Sentiment Survey. It's not just this week, it's every week it comes out. But this week was very, very interesting because it came out extremely bearish, very bearish historically, from most bearish, I think, since 2013. So basically what they do is, this is the American Association of Individual Investors. And it's pretty widely watched by traders. It's pretty important. And usually the sentiment kind of runs counter to what's going to happen, especially if it's bearish sentiment. So if the AAII turns extremely bearish, usually the market will turn around soon after that because there's just too much cash on the sidelines and everybody's just way too pessimistic. And I thought that this week was interesting and I wanted to share it with you. It wasn't just me, actually. I mean, a lot of news outlets were talking about this, about how this was one of the most bearish reads in a very, very long time. And notice that the percentage of people here who are bearish is almost 50%. And more importantly, it's an 18% increase from last week. And if we go down further here, you'll see here, this is where they talk about the pessimism spiked to the highest level since April 2013, while optimism fell to an unusually low level. So this is just important to note. Doesn't necessarily mean the market's going to turn around right away like tomorrow, but it is of note. Whenever this sentiment gets too far in one direction, it's generally difficult for the market to go lower, especially when it's coming out of the H pattern like this. So that's why I'm a little bit tentative here into the end of the year. All right. Beyond that, the other thing that's got me kind of holding off on putting my foot on the gas full speed is the fact that we've got an FOMC meeting next week. I like to refer to these as monster truck rallies. And this one is what I believe is going to be the most important one of the year. Why do I say that? Because One, the tone of the market has been that anytime there's a little bit of dovish sentiment coming out of the Fed, if one of them is speaking, the market seems to get caught up in a whole lot of short covering, seems to rip to the upside. That could happen. We're supposed to have 3 to 4 hikes next year in 2019, but now Jerome Powell has backed off of that, and he's now hinting that there may be just 1 hike next year or maybe even none. The commentary after this meeting is going to flesh that out a lot clearer, I think, and they're going to make it more, more transparent, more well known as to what they're possibly going to be doing in 2019. And I personally think that if the outlook changes and investors see that possibly the pace of rate hikes is going to slow, or we may have less of them next year, I think the market could catch a serious bid. I've been telling my weekly option subscribers that we're going to be looking at very short-term at-the-money spider, straddle, or back spread combination on that Wednesday, because it's a phenomenal way to use options that only have like 2 hours worth of life left in them, so there's very little time value, and yet there's possibility of a very, very explosive move in either direction. So all that being said, what is the trade for next week? Personally, I believe the trade for next week is no trade. I think you shouldn't have really anything on here unless you've got some shorts from good location that you're managing. But I would wait until Wednesday and see what happens with that Fed. Either the market's going to take it as very bullish or very bearish. They are going to raise rates on that day. The odds of that are pretty strong. But again, it's all about what the outlook is going to be going forward. Now, from a technical picture, as we trade into next week, here's the things that I want you to keep in mind that are very, very important. The S&P still has an excess low here that is lower than where we were. Remember, Monday's low that was the look below and fail went all the way down into here. The S&P has not yet come down to that area. Beyond that, if you take it out to a larger time frame, if we do get followed through outside of the box, remember I was saying that the range is the full 200 points. That would put the market all the way at 2,400. But long before that happens, I think probably you want to be looking at this area here around the 2550 where there's support, and also a little bit higher, just around there, wherever these prior supports were. So that could be the outlook for this week. And understand, that's only if the Fed is construed as bearish, right? Remember, we've got that big announcement. I also want you to keep that AAII investor sentiment survey in mind. Remember, that takes a little bit of time to play out, but you may want to start looking at that between now and the end of the year and into 2019. Start looking at that every week when it comes out. It's free. It's AAII.com. And if you see that the pessimism just keeps growing, or maybe even just plateaus and just stays pessimistic for a while, as the market comes into these supports, there's probably a chance for a really, really big bounce. So we'll see. All right, that's all for this week. As I was saying earlier, I'm excited to host Terry Lieberman, who is the CEO and founder of ShadowTrader, for a webinar next week. It's going to be Monday at 4:30 p.m. Eastern. It'll be free, and Terry will be talking about all the different functionality and personalization and things you can do with ShadowTrader. He'll also be contrasting the ShadowTrader Blue and the ShadowTrader Lite product, so we're pretty excited for that. Also, the ShadowTrader.net holiday sale is starting right now. It's actually officially starting Monday, but those of you that are watching this video, I'd be glad to give you the coupon code now. Write it down. It's Holiday15, all lowercase, HOLIDAY15, and you can apply that to anything on our site that's a one-time purchase. Unfortunately, it's not good for any of the advisories or anything recurring, but if you're looking to pick up some Think Scripts or Trading Psychology series, anything that's like a one-time purchase, you can get 15% off from now until the end of the year. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.